Hello everyone, my name is Matthew Frailey, founder of BreakpointTrades.com. It's been about a week since I did a video for you guys on YouTube. I've been very sick, finally getting better. And anyway, so in this video, I'm going to discuss briefly our KISS systems, which by the way, has absolutely nailed this move in the crypto market. So anyone who's been following our KISS systems, here's MSTR, for example, our system went long here on February 8th, and that trade is up 112.6%. Again, the KISS systems, as I've stated before, they're updated daily. You can follow them as full systems, etc. Pretty amazing stuff. Again, I'll be discussing all that in a minute. Then we'll go over the general market, my thoughts there. And the precious metals market has really been on fire lately. Finally having a good rally. And I'll be covering that as well. Again, I'm Matthew Frailey, founder of BreakpointTrades.com. I founded it back in 2003, over 20 years, to provide advanced technical analysis, market commentary, trade ideas, and advanced mechanical systems. We have 21 SPY and ES mean reversion systems, and of course our KISS systems right on the website. Amazing stuff, but let's go ahead and jump into this newsletter. Hello everyone, this is Matthew Frailey with BreakpointTrades.com. This is Monday, March 4th, 2024 newsletter. Again, as many of you know, I've been quite sick. I had a major stomach bug, finally starting to subside, but really kicked my butt. But finally, again, feeling better. That's why I haven't done a YouTube video in about a week. Anyway, in this newsletter, we're going to cover the general market. We're going to discuss our KISS systems, crypto market. We're going to discuss the major indexes. We'll also look at some of the major tech stocks such as Apple, Google, and Nvidia. We're going to look at a couple indicators, the VIX, the NYAD. We'll look at the bond market. We'll do a sector snapshot. We're going to look at the US dollar, commodities, crypto, which has been on fire, precious metals, and gold stocks, which have recently come alive since last Thursday and Friday when we started getting bullish on them. Really nice move in these ideas. Remember, I put a lot of these ideas out well over a week ago, the previous weekend. So hopefully some of you caught those. And I'm going to be going over some recent trade setups. All right. So as far as the market, the S&P 500 once again made a new all-time high, basically hit 5150 in late afternoon before selling off into the close, where it closed down about 6 points. What we're monitoring and what we discussed on the weekend newsletter that Steve Nelson sent out are these fifth wave moves. Remember a week or two ago, we were expecting another move higher in the market, and we got that. We're in this fifth and final move. We are monitoring these potential wedge patterns, and I still think we could still maybe have one more little bounce up, but it is getting late in the game. All right, the trend hasn't changed, but we're obviously in an area where you need to start monitoring things, and even some hedge ideas such as the SPXU, the SQQQ. Those are the inverse ETFs for the S&P and Nasdaq. As I stated, crypto market has been on absolute fire. You could have been in a handful of the ETFs with the stocks such as MSTR, Coinbase, etc. By the way, our KISS systems caught these trades in all this area and are up substantially. So I hope some of you followed those. The systems have been amazing there. One thing I am noticing about the crypto market is some of the stocks such as Mare and Hive and some other ones are starting to weaken, while things like MSTR and Coinbase have been stronger. So just be aware of that. Precious metals market finally coming alive. About 2 weeks ago, I put out some trade ideas there and I said to watch that area. And finally, late last week, that area started to come alive, especially on Friday when GDX broke through a downtrend channel line. That was an area to really start getting aggressive. We had a bullish break in symmetry today, and that area looks great. In fact, I'd be looking to buy the next pullback quite aggressively. Some of the ideas I'd put out were AU, GDX, GDXJ, EXK, BVN, etc. All right. So let's go ahead and look at some of these KISS systems first. So first off, here's Nvidia. KISS system went long here on December 28th, 2023, right here, caught that move. The trade is up 71%. Again, this is not a back-tested result. This is live. This was put out live on the website. So this is a real trade you could have followed if you're a subscriber, or if you've been following our KISS tables, which have been open for people to view at this time. That's soon going to be locked down. What's really been going on in the market are the semis leading lately, and of course crypto. But definitely keep an eye on this. NVIDIA, we're not too far away from that round number of 5,000. Maybe we get a blow off up to that area. Who knows? Next, image number 3. Here's Coinbase. Kathy Woods, as you know, this is the KISS system. Again, this is taken right from the website. And this trade, not showing here, this trade is up, I think, 70%. It went long here on February 28th. And you can see it. The KISS system did a really nice trade back there in November and December. Heck of a winner. And it caught a second nice winner back to back. Okay. Next, image number 3. Here's MSTR. This is one I personally took. KISS system went long on February 8th, right here. Trade is up 112%. Awesome. Just crazy. Now, the nice thing about MSTR, they buy Bitcoin, so it's kind of it's more of a pure play on Bitcoin than some of the stocks like Mara and Riot that have actually been down lately. The final one, here's Bido. That's one of the Bitcoin leveraged ETFs. Again, I know there's the newer Bitcoin ETFs out now, but they don't have enough data on their daily charts for a KISS system to be given trades yet. It's kind of like, if you have a stock that's only traded 100 days, you can't plot a 200-day moving average on it. So that's kind of how the KISS systems are. They need enough data to start plotting the data. But some of these ETFs like BITO, GBTC are obviously up substantially. You can see this trade went long on February 7th. It's up 45.8%. Again, these are not back tested. These have been live on the website. All right, let's go a bit back to the general market. So item number 6 shows the index sector table, what transpired today. The market, the sectors, currencies, commodities, bonds, etc. So as far as the major indexes, again, we did hit new all-time highs today on the S&P, as I stated, hit 5150, but pulled back late in the day. All the indexes end up closing slightly negative, less than 0.5% down. As far as the 21 market sectors we follow, more of them were up than down, quite obviously. So it wasn't a bad day. Again, there was a handful of sectors that were down. They weren't down very much. Looks like the weakest was communications services. That contains a couple of the big FANG stocks, so be aware of that. And energy was quite weak today. Currency-wise, US dollar was flat. Cryptocurrency, Bitcoin was up yet again. It's up 7%. And, there's a lot of the stocks have been crazy, but Bitcoin just continues to rock and roll. Honestly, 100,000 doesn't seem hard target to achieve at this point. Commodities, the index was down 0.3%, even though crude oil fell 1.5%. Natural gas continues to rally. Remember, it had hit a 28-year support level, as I've been showing on the weekly and monthly charts. So following through yet again this week. It's been a nice bounce trade. If you like to pick bottoms. Copper slightly down. The ag area was up today. Precious metals, remember, they started rallying late last week, and then Friday, nice follow through today. That's exactly what we wanted to see. Gold up 1.6%, silver up 3.25%. GDX, the miners, remember I always state the stocks need to lead? Well, they led last Thursday and Friday, and again today. So I think we turned the tide on that area. As far as the bond market, small moves up in the 10-year and 30-year Treasury yields. Finally, item number 7 shows the economic news calendar for this week. So today is the 4th. Tomorrow, the 5th, we have S&P PMI, factory orders, ISM, ADP, wholesale, beige book. Quite a bit of stuff here. And I think Powell speaks this week, one of the Fed governors, so be aware of that, guys. And again, we're also mostly out of the earnings season now. Remember, that's what was helping prop the market up, was earnings season. Generally, the market holds up and rallies during earnings season for obvious reasons. right? But now we're through that. So that's one that's one catalyst that's not going to be holding the market up. All right. So it's something to think about. But let's go and move to the major indexes. Again, Steve discussed these on the weekend, but since it's been a week since I did a YouTube video, we'll cover them. So here's a monthly chart showing the 5 major indexes. Again, we have 4 up months in a row. Again, there's been times in the past when you've had 5, maybe even 6, but usually that's getting pretty long in the tooth. We are looking for an eventual pullback correction in this market, and I think we're going to get one sometime in March, maybe up into May. Some sort of larger fourth wave pullback, but it won't end the bull market. But we've been quite extended here. Should be obvious to everyone. Next, image number 9. Here's the weekly chart with the same major indexes. Again, hella rally from the October lows. We've simply been following the 9-week EMA all the way up. That's your first target support on a nice pullback correction. Chart number 10, here's the daily view of the 5 key major indexes. Like I said, been one hell of a last 4 months. We are getting a bit tired, but we're still holding the uptrends for now. Okay, no changes, obviously. Let's go ahead and move on to the individual indexes themselves. So here's the S&P weekly. Like I said, been one hell of a move from this pattern, kind of like a cup and handle on the weekly. On a really good correction, this area, previous breakpoint, would be really good support. Pretty far away now, but again, that could easily be tested on a good fourth wave. Next, chart number 12, here's the KISS daily system for the S&P 500. Again, no changes. This smart trailing stop remains at 49.51. All right, the system went long back here in late October. You could see the initial smart trailing stop at the low and methodically moved it up. That's the beauty of the KISS systems, guys. So if the market decides to pop out now, maybe it'll eventually hit that smart trailing stop, but it'll be a nice winning trade regardless. Or if the market decides to rally for another month, the system will simply raise its stop and keep you in the trend. That's the beauty of the system. Again, it's going to have losing trades like you see here, a little whipsaw, but its risk is defined, keeps the winners or the losers small, stays with the winners. Why pick tops and be Mr. Bearish when you can just follow the trend, right? One person, Steve and I know, he's an ultra bear. He's been bearish this entire time, not participating in the market rally. It's best to just participate with the trend, and that's the beauty of the KISS systems. Next, image number 13. Here's the 4 time frames. So one thing to point out, guys, on the bottom, obviously we're holding the ATR on all these time frames. That's a really good guide. This is a weighted ATR, by the way. There's more weighting placed on the most recent bars. But the cycle indicator on the 130-minute and 78-minute. Notice how price has been really ping-ponging perfectly between these cycles. We had a cycle support last week where we rallied from, and we had a cycle support late last week coming in today, resistance, and that's where price has been pausing. Same on the 78-minute. Okay. Next, chart number 14. Here's a daily chart of the S&P 500. So still in this very steep wedge. Again, it's been one hell of a rally. We have divergence. Like I said, divergence is never a sell signal on its own. If you shorted just because of divergences, you would have sold back in December. You'd have been selling, a month ago. So divergence is never a sell signal, guys, on its own. You need an additional trigger, but it's something that you want to monitor because it can eventually play out. But again, we're still in the same wedge. We're still holding the 9 EMA. We're still holding this long uptrend line. The S&P needs to have a pullback larger than about 130 points to break the uptrend symmetry. Once it does that, that'll confirm the end of this initial uptrend and then look for a lower high on the next rally. All right. The 60 stochastic at the bottom, it's been embedded above 80%, as we've stated. That's another guide to monitor. Chart number 15, here's another daily view, zoomed in view of the S&P. This also has the volume by price indicator here. So here you got a little wave count. So again, short term, we're monitoring this potential wave 5 here. Once this ends, then maybe we start getting our correction. But right now, we're still in that. But the fact that we're now in some sort of wave 5 has me much more cautious up here. You know, a week or two ago, when we were pulling back, I stated we were looking for another high. But now that we've got that new high, I'm much more cautious. Next, chart number 16, here's a 2-hour view, nice clean chart. Just a nice clean channel to monitor. Now breaking that channel would obviously be significant. So that's something to monitor as well. Chart number 17, here's a 60-minute chart, shows the same channel. And this also shows you this leading diagonal potential that's forming. Wave 1, 2, 3, 4, and we're working on this 5. And you can see this subdividing little micro 1, 2, 3, 4. So again, you could have a little 5 here, or maybe this is a little wave 4 pullback, and then we still get another move up higher. But either way, we're getting pretty late in the game here. Chart number 18, here's a 30-minute chart, shows a potential wedge. And on this wedge, you could count potentially 5 waves. 1, 2, 3, 4, 5. So definitely has me a bit cautious. Today, I did take a bit of short ETFs, the SPXU, SQQQ, you know, just started scaling into them a little bit. Chart number 19, here's a 15-minute chart, shows you the wedge as well. Again, one possibility could be a pullback here, then yet another bounce. But definitely we're on watch. Chart number 20, here's moving on to the Nasdaq. Here's the triple Qs. Again, no changes, still in the same uptrend channel. For the Qs, you need a pullback larger than about 17.5 points. Otherwise, again, remember, you got a lot of supports below still. You have the 9 EMA, the 20, the channel line. You have divergence building, obviously, just like on the S&P. Chart number 21, here's another daily chart, just a zoomed in view of the Qs. Chart number 22, here's that a weekly chart wave count. Again, there's always variations in wave count, as you know. We don't like to get bogged down into wave counts. But this is a pretty well-defined pattern, it seems, and I've had this in place since early fall. So again, I've explained this dozens of times, but this is this potential nested 1, 2, 1, 2. So we've been working on this wave 5 of major 3. Once this 3 is complete, I'm looking for that deeper wave 4 correction that could be multi-week, guys. It could start now, it could start next week, a month from now, but I'm looking for this initial move to end. Now, it could be a zigzag like I show here, or it could end up being a coil because of the theory of alternation. So either one, I'm looking, once this ends, I'm looking for that wave 4 correction. Next, image number 23, here's the KISS trend system for the Qs. Again, no changes here. STS remains at 421.20. System went long on October 31st. It's done a bang up job about getting back long on the market, just a few days off the lows and riding that whole uptrend. Chart number 24, here's the 4 time frames. Again, similar look to the S&P. Like I said, we're above all the ATRs on all the time frames. On the 130-minute and 78-minute, price has been following the cycles really closely here. You can see price has been pulling back from the resistance cycles from last Friday. Chart number 25, here's a 60-minute chart. Remember early last week, I was showing this as a kind of a little falling wedge. I said we favored another high, and that's what we got. Chart number 26, here's the 30-minute view of the Qs. So you can see this potential wedge forming. You can see we tagged the upper portion of that, pulling back here late in the day. So we'll see if we can still get maybe one more bounce up in here. Again, it doesn't have to happen, but we're obviously getting a bit late in the stage here. That's why I took a few hedges today. Next, let's look at a few of these FANG type stocks. So here's NVIDIA. Again, remember, all this stuff in the market really got kicked off with AI early last year. And then, of course, lately, last week and into this week, it's been the semiconductors, which NVIDIA is a part of, and it's a part of the AI craze. But, you know, this count we've been showing, kind of like on the Qs, this nested 1, 2, 1, 2. So we've been working on this wave 5. Remember, we called that pullback in February as a wave 4. But honestly, you know, what was the high today? 876, 877. We're getting so damn close to that big magic round number of 1,000. it honestly wouldn't surprise me if it went up to tag the 1,000 either. One thing you learn about the markets is it really likes those big round numbers, likes to tag them. It's kind of like getting a magnet too close together. It will snap back. And so it's kind of, or another analogy is, let's say you have a stock that gets up to $90. It almost always hits 100. All right, that's kind of one of the little rules on Wall Street. Pretty effective. Chapter 28, here's the semiconductors. Again, this area recently has been on fire. That's what helped propel the market up late last week and then to today. Next, Apple. So Apple I had on our watch list last week, and Apple has been weakening, guys. So I had this on the watch list last week, and it looked like a short. It could have went either way, but it favored more of a short, and it broke down. Now there is a demand zone here where it may bounce off of, but Apple's not looking too pretty. And remember, Warren Buffett is loaded in this, but Warren Buffett can't go and sell at a market order like you and I, who have small accounts. Apple's something with, if Warren Buffett wanted out of, he would have to work out of over weeks or months. So just something to think about. Here is NVIDIA on the daily. Actually, let me look at the next chart. Here's the daily. This is the better chart. So again, you can see how Apple has been weakening quite a bit. And the market's obviously done well, but money's been rotating out of Apple. Now there is a supply zone here, little increase in volume. So maybe we got a little capitulation volume here, but it is downtrending. It's well above the 200-day moving average now. And what's the KISS system been doing? It's been out of Apple. Some other FANG type stocks that are also weakening here. Here's Google. It's been just downtrending, as you can see. In fact, it tagged its 200-day moving average today before recovering some. This one got out of order. Here's a chart of Apple on the monthly. And I'm showing you this, guys, because just take a look at this. I mean, this goes back to 2007. Obviously, it's been on a parabolic uptrend. Been one hell of a ride if you've been a buy and holder on this. But one thing that concerns me is, and I've showed this before, you have a big old MACD divergence on the most recent high. And this is a monthly chart, guys. So that divergence goes back to 2021. And it's a pretty well-defined divergence. You can also draw a nice trend line on the RSI. That's something to watch too. But eventually, Apple may have a bigger top in place here if you start breaking some of these areas. So just something to be aware of. Next, chart 35, here's IWM small caps. Remember, they were coiling. They finally broke out of it slightly, a little pullback today. Again, for now, this broken trend line would be your support. Hell of a rally from that October low, from that demand zone. Chart 36, here's the 2-hour view of IWM that Steve discussed on the weekend. Have some wave counts here. So again, you can see a potential wave 5 here, kind of a wedge pattern that's forming. So a little caution is in order. And chart 37, here's a 30-minute chart just showing some channel lines to monitor as current support. All right, guys, that does it for the market. Now let's go ahead and move on. Look at a couple indicators here. Here's the VIX Volatility Index. So this is our VIX Bollinger Band system. Whenever the VIX closes outside its upper Bollinger Bands and back inside, that gives you a buy signal on the S&P. And you get the reverse, you get a sell signal on the S&P when it closes below its lower Bollinger Bands and back inside. We haven't had too many of those. But while not perfect all the time, it's been pretty damn good. We had 5 buy signals in a row here since December. They've all played out. Right now, it's not telling you anything. However, let's take a look at a 60-minute chart. So here's a 60-minute chart from the weekend. You have this falling wedge into a demand zone where it's trying to bounce from. So keep an eye on that. Chart 40, here's the S&P 500 versus SVXY. That's the inverse VIX ETF. And obviously you can see they move together. But when it's something to watch, because if you start seeing, say, the SVXY diverging from this, that could be a sign of an inflection coming. And the final indicator here, the 10-day average of the NYAD versus the S&P. I've been pointing this out. You have a divergence here with a lower high on this versus that higher high on the S&P. Again, it has yet to produce a pullback, but you can see in the past some of these divergences play out. So it's always something you want to watch for. Moving on to the third part of the newsletter, just look at a few of these sectors. We already looked at the semiconductors. Here's XLK Technology, the big boy. Still holding up okay. New highs today. Little spinning top doji though. We have some MACD divergence there. Chart 43, here's XLC. That's the communications sector. It contains things like Amazon, I think Netflix, some big names, but still uptrending here. Little support zone here to watch. If that was to be broken, that can be important. Chart 44, here's the financials. They've had a hell of a run, still in this uptrend, still holding the 9 EMA for now. Chart 45, the transports, remember the cup and handle we showed back in January. It's obviously been playing out. Still holding up here, still holding its 9 EMA. It's been a good trade. Chart 46, industrials. This area has been on fire and it still remains extremely strong. Look at that move. RSI 14 is now overbought though. Chart 47, materials, XLB, another, this area remains super strong as well. Chart 48, utilities, they had a nice pop today, something to watch, trying to break a channel line here. So that's significant. As I stated, the energy area was weak today. Here's XLE, weakening. Steve drew a potential little wedge here on the weekend. So if this were to break, get a pullback, maybe we'll see if it forms a higher low after a pullback, but definitely a little wedge here. We did have a slight symmetry break here though, so that's a positive. So I would be mindful of a higher low on a pullback. And chart 50, here's oil services, same deal. Remember, the energy sector was one of the weak sectors today. Moving on to commodities, here's DBC, the index. Again, slight up today, despite the fact that crude oil was down, which we'll take a look at in a second. Here's the weekly view of crude oil. Let's move on from that. Here's the daily chart of crude oil. So again, down about 1.5% today, no changes. There is a resistance area right into here that it's pulling back from. A lot of support in this area. We'll see what it does there. Moving on to natural gas, chart 54, natural gas on the weekly. Again, remember a few weeks ago I pointed out that major support around the 150 area. I don't have the monthly chart in here tonight, but that support goes all the way back to 1995, so 28 years. And we've had a nice 3-week bounce off of that area so far. Chart 55, here's the daily. Again, you can see the nice bounce. You really needed to be long this down here because you had, otherwise you had to chase the little gap. But it was obvious that that 150 area was a good support. So far, it's been a nice little bungee bounce trade. Chart 56, here's copper. I'm just showing the weekly chart here tonight because in the bigger picture, it's forming this 1.5-year coil-like pattern still inside the coil trend lines. Chart 57, DBA agriculture ETF. Nice update today. Again, this has been uptrending nicely since the trigger from this pattern break back in January. Chart 58, DBA weekly view. This cup and handle pattern, remember that I showed back in December and January, has been playing out nicely. Again, it's not a big beta mover. It's not going to go up 100% like some of those crypto stocks did in a week. But, it's also nice to have things that are a little more muted because you can have larger position sizes, not get emotional on just noise. Next, moving on to the bond market, chart 59. Here's the 10-year treasury yield. Slight bounce today, up about 1%, but it's pop. I'm wondering if our wave C was put in last week. Remember, I've been showing this as an ABC pattern. That's what I've been favoring. Here's the weekly chart. Chart 61, high yield corporate. Slight break of this coil. Remember, this coil has been forming for just over 2 months. I do believe this is going to form a big MACD divergence, though. You see how that MACD is really lagging. But for now, no changes. Remains trying to break out of this coil a little bit. If this were to move up out of the coil a bit, that could help hold the market up a bit longer. Market tends to follow this. Let's move on to the crypto market. Here's Bitcoin. Superman market. Up, up, and away. Look at this. Look at today's move. Man, at this rate, it could go to 100,000 pretty easily. You had a little flag pattern back here, but man, one hell of a move. Chart 63, here's the weekly chart. So we've done a pretty good job of analyzing Bitcoin. So back in 2022, we showed this fifth wave low, which ended up being the bottom, and we've been rallying up. We're now in some sort of fifth wave move up here, but again, trend remains very strong. Chart 64, here's Ethereum, up and away, well over 3,600 now. Awesome. Chart 65, Ethereum Grayscale ETF, hell of a move. Remember, this is also on the KISS system tables. The KISS system have caught all these moves very nicely. That's the nice thing about the KISS systems. They'll catch these moves. Chart 66, MSTR, same deal. One of the crypto stocks. This one buys Bitcoin, so it's a pretty good play on Bitcoin itself. Unlike, say, Mara, where they mine it, but quite honestly, their fundamentals aren't very good. But MSTR, man, look at this move. We had it on our watch list here on a break of this 530 area. Hell of a move, guys. Hit 1350 today. KISS system has caught that as well, as I showed you earlier. Chart 67, Coinbase. Again, another nice gainer. Kathy Woods is happy, I'm sure. Moving on, here's the US dollar. It was essentially flat today. Kind of this expanded coil pattern. So if it were to break this little lower area, that would be significant. Let's move to the precious metals. Some good stuff here. So here's gold. Another nice follow through today. Remember, last Friday finally broke out of this coil. But here's the thing, guys. I mean, gold was really holding up well here. The stocks were not, but the metal was holding up very well. But on Friday, we had two confirmed buy triggers here. We had a trigger on the GDX GLD ratio trend line break. We had a break on the price pattern itself, and we had a break on the RSI trend line. Those were all valid triggers on Friday. Again, I apologize. My goal was to make a video only on the precious metals market on the weekend and send it out because I thought it would look extremely bullish on that breakout on Friday. But I was still quite sick on the weekend. I just couldn't get it out. But again, just awesome move here. Next, chart 70, here's the weekly view. One thing to monitor would be this upper trend line here. Could be a little resistance area to monitor. Chart 71, there's the same weekly chart. This one has the ratio. Obviously, longer term, you want to see the ratio break this downtrend line. And if gold really wanted to go, if gold wanted to go to the way of Bitcoin, here, this would be the very bullish count, this wave 5, and we're in this wave 3 up. This would probably take gold up to 3,000, but again, hard to say if that's going to play out, but it is something to think about. Moving to silver. Silver had a nice day. Remember, it's been stuck in this big old pattern for a year. Nice move today. And chart 74. My favorite way to look at silver is this monthly chart. Essentially, I have a big 4-year coil on here. When this eventually breaks out, there could be one hell of a move. Maybe it'll test, on a break of this, maybe it'll eventually go up and test those all-time highs at the $50 range. Here's what showed last Friday. So our BPGDM, bullish percent gold mining, this is our system chart. Nice clean Renko chart. It's not perfect, nothing is. It's a little whipsaw here, but it's going to been giving you very clean buy and sell signals. Had an awesome sell signal back there in May of last year. That was excellent. You had a little whipsaw there in July, August, but then you had an awesome buy signal in late September, awesome sell signal in December, and you had a buy signal. It was either last Thursday or Friday, and it was last week. So that was an objective signal from the oversold territory. Again, this is a mechanical system. Nice clean setup. Moving on to GDX itself, the miners. So remember, we had this channel into the demand zone, which ended up holding. Last Friday, we broke the channel line on expanding volume. The GDX GLD ratio broke its trend line. That's a trigger. And you broke the RSI trend line, another trigger. So you had 3 triggers confirmed last Friday. Awesome follow through today. Maybe we get a little follow through tomorrow on the 200-day moving average. Then I'd be looking for a pullback. At this point, I would be looking to buy pullbacks aggressively. Chart 77, here's the 2-hour view of GDX. Remember this channel we've been showing? Well, we broke symmetry. The rally up now off the lows. $2.90. That's larger than the previous rally, which was $1.90. That's a bullish break in symmetry. So now there's an open gap here. My guess would be if this follows through on Tuesday, maybe it fills this gap, but there's a supply zone up here. This would be an area somewhere to start pulling back from. But again, I would be a buyer on a pullback, guys. Some other ETFs, GDXJ, that's another one. Again, nice rally off the demand zone. Again, you have to decide what you're going to trade here. I would keep it simple, do some ETFs, maybe a few individual stocks at most. Here's another ETF, SILJ, that's the Silver Junior Minor ETF. One hell of a rally off the demand zone on expanding volume. And you got your confirmation on the ratio trend line. Here's some individual names we liked. AU, Anglo Gold. I showed this 2 weeks ago and last week. Was my favorite. It was a coil pattern. And look at this move up. Now your target is filling this gap and the supply zone. You can see the ratios confirm that move. Charter 81, DPMLF was another one. It's Dundee Precious Metals. It's Canadian based. But nice move if you bought this one. The reason I like this one is because of the weekly. So here's the weekly. It's really held up very well over the last several years, and you had basically an ABC pullback. Some others, Charter 83, EXK, it's a small low price silver stock. You got a very well-defined downtrend line here, and a trend line on the ratio. And you can see that triggered on Friday, expanding volume, following through today. Some other ones, here's RGLD, Royal Gold, one of the major ones. Nice, huge rally off support. Again, maybe, this 50-200-day moving average up here would be resistance. If you're not in this, it's tough to buy it now, but best to look for some sort of ABC pullback. Charter 85, FSM, another one, nice rally off the lows here. Small silver stock. Charter 86, Nova Gold. Here's one that hasn't broken out. So if this breaks over 257, you could have maybe a move all the way up to the supply zone up here. That'd be a nice percentage move. And the final one here, Charter 87, BVN. This one has had the strongest relative strength in the precious metals. Hell of a rally since the December timeframe. Now you got an ascending triangle forming here. So it could be another one to watch for a breakout. Hope you guys caught some of these puppies. Let's move on to the other trade ideas. Just going to follow up on recent ideas we've had. I didn't add any new ones here. So here's Sienna. It was on the watch list. We added it last Thursday. Huge breakout on Friday and today. If you're a subscriber, you could have caught these. Could have paid for your membership for a few years just with that trade. Charter 89, QRVO, another one from last Thursday. Nice breakout on Friday. I didn't catch any of those guys because I've been sick. Charter 90, Advanced Auto Parts. This is one of mine from last week. Broke out last week out of that little tight channel, moving up. And kind of has a big inverse head and shoulder look on the bigger time frame here. Charter 91, Dollar General. Remember, I've liked this for about a month out of this coil. Got a higher low. It's been moving up. It did tag its first target of this supply zone up here. Charter 92, TSBX, one from last week out of that base. Hopefully you took some profits late last week because that was a good 50% move from that breakout base. Again, this was a long idea from early last week. Charter 93, TRU. It's been on the watch list for over a month, still holding up well here. Just trail the stops up. I wouldn't leave my stop at 73.30. I'd probably move it up to maybe Friday's lows at this point. And the final chart here, ES. This has also been on the watch list. This flag pattern I've liked. And nice reversal today. This still looks decent to me. Maybe you can make it up to the supply zone. All right, guys, that'll do it. And let's quick check on futures here. See what things are doing here tonight. And ES futures are down about 9 points. We'll see how things fare tomorrow. And that'll do it. Again, appreciate all the support. If you're just viewing us on YouTube, please consider subscribing. That helps us out, and you'll be amazed at how much more content you'll get being a subscriber. And of course, access to our systems and our live charts. All right, have a wonderful evening. Take care.